Hello traders, today is the 1st of April 2022. My name is Neville Hornsey, market analyst for YouTrading. And today I'll be looking at the US dollar. Okay, in this video I'm hoping to basically look at the key levels for where to trade to or from on the US dollar. So we're looking at the US dollar index. It's the June 2022 contract on active trader. And if we look to the sentiment indicator, we can see that 60% of traders are trying to go short the US dollar, which means 40% are trying to go long. And if we look at the recent price action, we've had the last 3 months have been trading higher. So momentum's to the upside. If we look to the 20 and the 50 EMAs, we can see that the red is about to cross over the 50 and they're both pointing upwards. So again, longer term momentum's to the upside. Price action, obviously we're making higher highs and higher lows. So in terms of trend and momentum, price action is going higher. If we look to the left-hand side, we did find some resistance at the lows of March 2020. This indecisive candle here was the last of the buyers that obviously gave up around the pandemic before this big sell-off. So these guys, they might have flipped their position now. Obviously, if they were short, they've just got back to break even. So lots of traders close out. Looking to the left, there's not a lot else on the monthly chart to sort of give us any indication of a price target other than this double top, which will have a lot of liquidity above it. Obviously, once you go up to a new high, like we did in January 2017, and then retest that without going through it, those stops basically get doubled up. So there's a lot of liquidity there. So lots of buy stops for anyone that was short in that high. So 104 is possibly the larger target, assuming that this trend continues to the upside. Now, obviously, we don't go straight up. We come back down and we test other levels, and we can see here that where we've had a sort of base rally, there's been a pullback towards the highs of the base. So if we were to look across here, we've had a rally, then a base, then an outside month in January, start of this year, so bullish, and we've tested all of the highs so far, apart from the February 2022 high. So on a larger time frame, I'm expecting a pullback to test the February 2020 high. And in terms of what happens for the rest of the year, assuming that the rate hikes continue in 2022 from the Fed, and the dollar is supported by expectations of further rate hikes all the way through the year, especially at 50 basis points, we should continue to see the dollar rise. Currently, dollar bull, even though retail traders are trying to short. Obviously, the deeper they go into that sort of position, the more likely they are to get squeezed. So personally, if I would prefer to see the US dollar keep rising and this short position keep increasing. Okay, going down to the euro versus US dollar, because that is the sort of main component, if you like, of the US dollar index. It's the most sort of heavily weighted. Obviously, the euro has been under a lot of pressure because of inflation, because the monetary policy divergence between the ECB and the Fed. We've also got the geopolitical tensions in what is essentially Europe. So if that was to worsen, then the euro versus the US dollar is likely to carry on going lower. And that's where we get a break of this rising trend line. There are no other monthly highs that I'm targeting as such. So assuming that we find some sort of resistance at February's low at 1.1105, the next sort of liquidity to the downside are below these swing lows. So that's kind of what I'm looking for, because again, 73% of traders on this platform are trying to go long the euro versus US dollar. The bigger that sort of number gets, the more likely we are to come back down and test their stops. So 20, the 50, the 200 period moving average on the euro versus US dollar, all stacked bearishly. If you look at the last 3 candles, the monthly closes are lower. We've had lower highs and lower lows. So trend momentum to the downside. Not a lot of support in terms of monthly highs. So now we're looking at liquidity under swing lows. So we could be back down towards 1.05 over the course of the next quarter. Dollar CAD, obviously CAD and oil have been rising and falling together. Currently, we've got dollar over the last 3 months. So if we go 1, 2, 3, the last 3 months closes are lower. We had an outside month in March. So again, a very bearish signal. We could obviously get a pop up to the February low, 1.2635, based on the fact that the 200 period moving average on this monthly chart is acting as support. We did find buyers come in around April 2021. That's been tested and held. So there is a possibility that there's liquidity above. You can see these two little triangles here. This could be liquidity above July 2021 and also December 2021. So if the dollar was to go higher, and if the sort of tensions around geopolitics and things like that ease the pressures on oil and inflation, then the CAD could come lower, the dollar could go higher, and we could go back up towards the September 20 lows. Obviously, we need to get through all of this price action here. There's the 20 and the 50 period moving average acting as dynamic resistance. February's low acting as solid resistance. So dollar CAD, very mixed, not easy to sort of pick a level. It'd be easier if we actually sort of crashed through, took out this low from April 2021, used that as some sort of resistance, and then came back down to test this clean July 2014 high. However, dollar CAD's not really giving us much. It'd be also just as great to go through all of this resistance, make a sort of breakout, retest, continuation higher, and take out the double top up here. So currently, if you're going to trade this, it is a range. You want to be looking for reversals at the lows and the highs. Pound versus US dollar. Pound is basically in a downtrend. The last 3 months have confirmed that the momentum to the downside. The moving averages 2050 and 200 are also sort of acting as a resistance. So it's just as easy to come down as it is to get through all of that. There is no real monthly high to test. It's all been tested now. We tested the September 2020 high. We could potentially have buyers come in, if we can get, say, through February 2022's high, February 2022's low, get back above the EMAs, and this is just a sort of corrective channel, then a descending channel. I normally look for a break to the upside. So if I see a descending channel, I look for a break to the upside. That would then indicate that we're going to take out the liquidity above these green triangles. So if we were to look left, the sort of main sort of resistance came from April 2016. If we can get back above the 1.43, then we're heading towards 1.45 and the 200 period moving average. But again, the pound US dollar, not an easy trade at the moment. Dollar versus the yen. If we go to the Forex heat map, we can see that today the yen is weak. US dollar is seeing some flows go into it. Also got flows going into the commodity pairs, so it's more of a risk on day anyway. So looking for the dollar yen to continue going higher. We had a big impulsive move obviously in March, which then caused the Bank of Japan to intervene. I'm hoping that the momentum's to the upside, take out some sort of liquidity up here around 125.8, maybe all the way up towards 127. Obviously, this big impulsive move has left a massive imbalance. We could obviously come down to the 116.3, but for now, I'm assuming that this goes higher. I'm looking for reasons to be long, and whilst these sort of balance areas here, so we had a rally, base, rally, rally, base, rally. Whilst these sort of balance areas here, the red candles hold, I'm willing to sort of chance my arm for a long to see if we can take out some recent highs. So really, the dollar is setting up for a long. It could be a bull flag. We've had this impulsive move up, deep correction, another impulsive. So for a while now, I've been saying that this is like an Elliott wave, 5-wave pattern. So first wave, second wave, third wave, fourth wave comes down to the top of the first wave. So that's, you know, like an Elliott wave. Then we could have a fifth wave impulsive move to the upside, in which case we could look for trend-based extension. So we go from top of wave 1 down to wave 2, and then target the 2.618 fib extension and this 101 level. So break through the sort of really key psychological 100 up to 101. So that's my base case scenario. I'm looking for this dollar to break out to the upside. You know, this bull flag, is holding its sort of shape quite well. If we can get through the lows of March 2022 on the 27th of March, then yeah, these daily lows, if we can get through those, then we're looking for the liquidity above the swing highs. Okay, that's what I'm looking at. I hope that makes sense. It's Friday, it's NFP day today, so I'm not expecting to take any further trades ahead of that. Wait for Monday and then sort of see where the market lies and see how much of this analysis has held up. All right, speak to you again on Monday.